What's up everyone, my name's Robbie, this is Robbie Manila, and we have a good video today. So in today's video, we're putting up Charles Schwab versus Fidelity to see who's gonna win in a battle between, honestly, two really good brokers. Now you may have watched my video where I compared Vanguard to Fidelity, and if you haven't, I mean, why haven't you watched it yet? There's a link in the description below. Watch it after this video. Now I am excited to do this review, so let's go ahead, let's just run the intro and let's get this thing started. Okay, so before we begin, I have a request. Just leave a little comment. Let me know which of these brokers you end up liking the most. Let me know after you watch the video. I would love to hear from you. And by the way, also, hit the like button. So I want to start off by saying that these two brokers are in my top two brokers. They are the two best in my opinion. And so it's really hard to compare them because they have a lot of things in common and a lot of great qualities. So at the end of this though, we do have to pick a winner. So we are going to pick a winner. And so let's go ahead and let's get this thing started. So first, let's start with the things that these two have in common. All right, so here we are on the commonalities between Charles Schwab and Fidelity. There's a lot of things in common between these two brokers, and I'm going to kind of go through these a little bit quickly, the commonalities part, because really the distinguishing factors or the differences between these two are what are going to set one versus the other apart. So let's just go through this quickly, and then let's get to the distinguishing factors. So first, this is the must. Every broker must have this at this point in time. Commission-free trades. So they both have commission-free trades. So you don't pay money for placing a trade for a stock, an ETF, or an index fund at this point in time with these two brokers. So, great. That's what you need to have. So check. Next, we have the different accounts. These are like what I call like the grown-up brokers. They're not like the new brokers, like the fintech brokers. They're not like Robinhood, where you just they're really for beginners, where you just have like a brokerage account. Maybe I think a couple of the like M1 Finance has like an IRA available, but these have like legit accounts available if you have a specific need. So for example, if you want to have of course a brokerage account and an IRA, you have it in a Roth IRA. So those are three things that I think a lot of people should have access to. But then you have the things that are not as important, that are kind of more specific to someone with more unique needs, and that is a SEP IRA, a simple IRA, and then maybe a 529 plan if you want to save for a college savings account essentially. So if you're looking to save some money for a child and put it into something that's going to be tax-free when you take the money out, then tax-free as long as you pay for a qualified educational expense, then this is going to be available as well. So you have these things. But after this, you then have something that these brokers do not have, which is cryptocurrency. Now, if you're a cryptocurrency investor, you're not going to have access to this. You're going to just have to go somewhere else. So that is that on crypto. Research-wise, they both have great research, and I'm very happy with the quality and the amount of research that both of these companies have. I care about research, and so if you do too, both of these companies are going to be great for research. For screeners, they both have screeners. That's another thing that I do care about because I use screeners quite a bit. Screeners for stocks, screeners for ETFs, screeners for index funds. If you want to watch any of my videos on screeners, I'll put one video here. I'll put some in the description below as well. Take a look at those if you want to. Of course, I just, they have access to stocks, so I just put that on there just so you know. They have access to ETFs, index funds, and they have access to mutual funds. So you can pretty much invest in anything in this thing besides cryptocurrencies between Schwab and Fidelity. Then you have bonds, same deal. You have access to bonds, so check mark there. Options-wise, they both have options available. Now the thing is, for options, there is zero commission options available for Fidelity and Schwab, and it's 65 cents per contract. And that's actually pretty normal. You see that in a lot of places, but there are some companies that I believe don't have that per contract fee too. So if you're into options, while these two are the same, there might be some other companies that do have better options pricing for you. So take a look at that if you're into that. Low-cost index funds and low-cost index funds and ETFs, they both have them. They both have proprietary index funds and proprietary ETFs, but they also have the access to each other's ETFs and index funds and a whole boatload of other companies. For example, if you want to go with Fidelity and you actually want to end up with like a Charles Schwab ETF, like SCHD, for example, you can still buy SCHD, which is Charles Schwab ETF, through Fidelity's broker, and vice versa. If you went to Fidelity, if you went to Schwab, you can still get a Fidelity ETF. So you can still have access to the companies as well as tons of other companies. So you have access to these different companies, these different fund companies and their products. And so that's something that I think is important at this point in time with the market that we have with the brokerage market. So next we have the no account minimum. So you have no account minimum, unlike Vanguard, where to get in certain funds that have the lowest expense ratios, for example, something called Admiral shares, you have to have certain amounts of money. So at least these, you don't have that. So that is a great thing in my opinion. They also have brokered CDs, which, if you go to a bank and you want a CD, right? A brokered CD is a CD through a brokerage firm, so they have access to that as well. They have fractional shares. Now this one we're going to talk about later because there is some caveats on that. They have Robo advisors. This one we're also going to talk about later because there's caveats on that. They both have quality trading platforms. Fidelity has a really great trading platform. Now this is if you're into trading. So if you're into trading, then Fidelity has something for you. And also Charles Schwab has Street Smart Edge. So if you're into trading with Charles Schwab, you can also have access to trading as well. Now I will say that these are for more people who are into trading or short-term trading, technical analysis, who are going to go in and out of stocks in the short term. But if you're just a long-term investor, then you won't even really need access to this stuff. But, they have it available if it's something maybe in the future that you do want. Okay, so here we are in the differences, and this is really where it's going to distinguish which of these brokers is going to be the best for you. So let's start out with fractional shares. So here's the thing with fractional shares. Fidelity, they offer fractional shares. And with Fidelity, you can actually have access to both fractional shares in exchange-traded funds, which is ETFs, and almost every single different stock, I believe, that trades. Now the thing is, while Charles Schwab does allow access to fractional shares, there is a caveat. And so the problem is Charles Schwab is limited to just the S&P 500 for their fractional shares. So if you want to have a stock that's not an S&P 500, then you're not going to be able to have access to fractional shares. Also, Schwab does not have access to fractional shares in ETFs like Fidelity does. So when it comes to fractional shares, Fidelity is actually better than Schwab. So next we have the Robo advisors. So Robo advisors are actually an algorithmic way to invest your money, and basically you would allow a Fidelity or a Schwab to invest your money, allocate your assets accordingly, basically how much you want in bonds, how much you want in stocks, and so this would be available to you if you want a Robo advisor. So the difference is that Fidelity does charge an advisory fee. So if it's under $10,000, there's no fee, but it's $3 per month, or at $50,000 and above, it's actually 0.35%. So this can actually get costly. Now, when it comes to Schwab, there's actually no fee. Schwab's robo-advisor is called Intelligent Portfolios, and there is no fee for it. By the way, I did make a video about that if you want to watch it. I'll put a little link here and in the description below. But take a look at that if you want to see more about Charles Schwab's Intelligent Portfolios. There is one thing, and that is that there is as little as $5,000. So there is a minimum for this with Charles Schwab. So take that into consideration. Again, I made a video, but don't judge the quality because it's one of my earlier videos, so not quite as good quality-wise, but I go over it. I think I do a good job explaining Intelligent Portfolios to you. So the next distinguishing factor we have is futures trading, and in terms of futures trading, Charles Schwab is the only one that has futures trading. So if you're into futures trading, then it's $1.50 per contract with Schwab. So Fidelity does not offer futures trading at all. Next we have $0 index funds. And so these are actually a really great tool for a lot of people, especially if you have a lot of money and you just want to be an index fund investor, just put it in passively. This is going to be great for you. And the one that has this is Fidelity. And so these funds are called Fidelity Zero, and honestly, they're pretty great. So there are 4 different funds. There is the Fidelity Zero Large Cap Index Fund, the Extended Market Index Fund, the Total Market Index Fund, and the International Index Fund. And these are the different ticker symbols, so you can take a look at that. But if you're really into index fund investing and you really are fee conscious, Fidelity's awesome. The next thing we have is the banking services between these two companies now. So in terms of banking services, they both offer ATM checking. They both have no minimum on their checking accounts. They both reimburse their ATM fees, which is really awesome. And then the lending is the only distinguishing factor for the banking services, which is that Charles Schwab does offer some lending services. Fidelity does not. So like looking for a home loan or something like that, you could go with the Schwab. So maybe Schwab has a bit more banking services for your needs than Fidelity does. So if you're really interested in the banking arm of your broker, then Schwab's probably going to be a bit better. So the last thing we have on differences are the fees. And when it comes to fees, in terms of Fidelity, it actually ends up winning. Now, a lot of these fees you probably will never have to deal with. For example, Fidelity has no account transfer out fee for a partial transfer, but Schwab does, and it's $25. There's no account transfer out fee with Fidelity for a full transfer, but with Schwab, there's a $50 fee. So for example, if you need to transfer all your account out to another broker or something like that, there's going to be a fee for Schwab. Now, of course, this is if you close your account. Now, kind of stinks, but if you never close your account, you never pay the fee. But, it's good to know. Also, there's a bank wire fee. I've never used it because I don't wire money into my account. I usually just transfer it in from my bank account. But if you do ever need to wire money for any reason, there is going to be a fee to wire money into your account. So for fee-wise, Charles Schwab actually has more of these kind of little fees than Fidelity does. And so at the end of the day, which of these brokers ends up winning? In my opinion, here's my answer. So for me, I'm giving it to Fidelity. Now I have a Charles Schwab account. I love it. I'm never going to get rid of it. But if I was just starting today and I just didn't know anything about brokers, or I was just starting investing or something like that, or if I was rolling money out of my 401k and I need a broker, I'm probably going to go with Fidelity at this point. Now, main reason, there are two. The one reason, the most important reason for me, probably is the fractional shares. I wish I had that at Schwab. I don't have it for all stocks, and I don't have it for ETFs, which is important to me. That's number one. Number two, I don't really care about the Fidelity Zero funds for me because I don't really do really passive index fund investing. But if you do that, then Fidelity Zero can be really good. So if you're into that, that definitely is a huge check. Oh, and also, by the way, the last thing is that Fidelity does have better fees for these kind of little fees that sneak in there. Schwab has a bank wire fee and those things, so I think that that's better for Fidelity as well. So at the end of the day, Fidelity's winning this one. However, if you do want a robo-advisor, I think that Schwab is going to win on that front. And of course, if you want futures trading, you're going to go with Schwab. But everything else, Fidelity's the winner. So that's all we have for this video. I hope this helped you. I hope it helped you decide which of these is going to be best for you. Now, don't forget to leave a comment and let me know which of these brokers you're going to go with, or which you have and how you like it. Also, please hit the like button and subscribe if you want to see future content like this. And at the end of this video, there's an end screen. So please hit that coming up right now.